Here's today's Money Metals Minute, brought to you by MoneyMetals.com. Tuesday, quiet but positive for precious metals. Then things heated up overnight in Asia. Gold trading in a very narrow $12 range Monday and Tuesday, but then it shot up to $15 overnight. The most substantial gains coming in palladium, which is traded near $740 per ounce, up about 6% overnight trading. Meanwhile, physical coin and bar demand remains sluggish in North America after selling an average of 4.25 million American silver eagle coins through June. July sales reported by the U.S. Mint dipped to less than 1.25 million. Sales so far in August, retail precious metals look even weaker. The lackluster action, not surprising during the summer months, though. It's usually the slowest period and the weakest for them. Now here's a special report from Mike Gleason of Money Metals Exchange.
It is my privilege now to bring in Keith Neumeyer, founder and CEO of First Majestic Silver Corp., one of the top silver mining companies in the world. Keith has an extensive background in the resource and finance sectors and has also been an outspoken voice about concerns of distortions in the futures market's pricing for silver. First off, how confident are you that higher prices are still ahead in the next year or two? And then has that improved environment resulted in more aggressive exploration by you and or others? It sounds like maybe it has.
It's a slow process. I'm a bull on the metals. This bull market has resumed. We're going to see much higher silver and gold prices over the next 1 year, 2 years, 3 years, 5 years. No one knows how long the bull market's going to last again. We had a 10-year bull market that went from 2002 to 2011, 2012. We turned into a very deep bear market that lasted almost 5 years. Who knows where we're going to be going? But I'm pretty confident that we're going to see new highs in both gold and silver. I look at a couple of things, and then this is how I determine that. It says, if you go back and look at where the last bull market started, look at 2002, we had $5 silver prices, and we had $250, $300 gold. Gold went to $1,900, which is basically it's almost 7 times, and we went to $50 on silver, which is almost 10 times. So if you use $1,350 as a low on silver, that's $135 silver. If the same ratio was to repeat itself, that's multi-$1,000 gold prices, and that's what I'm expecting to see. And it's hard to imagine those kinds of prices when we're at where we are today, and it may even seem silly or somewhat ridiculous to talk about prices at those levels. But I'm pretty confident that looking back 3-4 years from now, looking back at this time, we're going to be shaking our heads and probably wishing we would have been a little bit more aggressive.
Now, Keith, we know you're not a big fan of the futures markets being the primary mechanism for price discovery in the metals. You've been quite outspoken about the shenanigans that have gone on there. Certainly there is something broken about a system where a handful of bullion banks can sell a bunch of ounces on paper representing a very finite resource like silver and trading those contracts in virtually unlimited quantities. And it's the producers who suffer the most if prices are held artificially low. So far this year, however, renewed speculative interest in the metals is driving prices higher. What are your thoughts on the recent action in the futures markets?
It's pretty interesting. We're reaching extremes that we've not seen historically, and usually the commercials are right. You go back 15 years, since I've been really following it. The commercials are the ones that seem to make all the money. There was the saying, just follow the commercials and you'll do okay. And this time around, are they wrong? I don't have an answer to that question, but it's sure looking like a desperate situation. And with the metals not wanting to correct, I think it's pretty exciting for investors. And there's definitely the potential there that we can see finally the market squeeze out some of these manipulators, some of these short sellers who've been screwing around in this market for decades and making fortunes on the back of retail investors as a result.
Since we spoke last, the Shanghai Gold Exchange announced a fix for gold as an alternative to the London fix. A silver fix may be coming, and many hope price discovery will be improved there, which is to say more closely related to supply and demand of the physical market. It isn't clear to us what to expect. Can you give us your thoughts about the Shanghai Gold Exchange?
Well, quite honestly, I think that's why we're not seeing the big spike down that we're so used to seeing. Everyone remembers going back over the last 10 or plus years where we would wake up one day and lo and behold, gold's down 50% $2 in one day and silver's down $1 in one day, and it's always on one of these very illiquid days or right at the end of the month when they need to print a certain price that their books look good for quarter end or month end or whatever they're trying to achieve. And it's just the shenanigans that, everyone got used to, and then, you kind of roll your eyes when it happened. You say, oh, geez, they're doing this all over again, and the regulators are just sitting back and watching and doing nothing about it, and then the retail investor just has to accept all the nonsense that goes on without anyone coming to the rescue, and as they should be. And then, now we've got a new player in the marketplace, and I think as we do see more and more players enter this market, and the silver fix obviously comes in, it's going to be more difficult for the same kind of games to be played. And I think it's very exciting, and I'm hopeful that we're going to see finally proper price discovery as a result of the new players coming into the market.
And that was Keith Neumeyer, CEO of First Majestic Silver, and Mike Gleason at moneymetals.com. Live prices at moneymetals.com show gold at $1,354 per ounce, silver at $20.45.